Hello and welcome to this week's recording for currency. We did a survey and gave various choices about what you'd like me to talk about this week, and the one that came out as the winner was chart of the day, or chart of the week as it were. And so, having looked at the six majors that I write commentaries for, the one that was the most interesting was the Eurodollar. I'm going to show you why it's interesting to me and what I'm doing there to actually look at that particular market, and also give you some insight into what some of the professional indicators are showing as well. First thing we're going to look at is the weekly chart. The thing that stands out is in the recent past we've had 5 dojis, including a doji last week, and I regard dojis as either reversals or continuations. They're traditionally meant to be reversals. This obviously failed on this candlestick here, but we've had no real follow through since that break, so there is a reluctance to push the market lower in spite of the ups and downs of really what's been dominating, which is the story from Greece. On the daily chart, there's a few things that stand out here as well. These various arrows and squares are different types of divergence patterns that I've built over many years. And what we have here is quite an aggressive signal. There is 3 arrows there, and they are a multitude of divergences that are going through the RSI. And I've had a signal on the daily chart on Friday. What I've also drawn is the area from here to here, and we have 3 lines. The one that I'm really interested in is the purple line, and what this is the point of most time within that trend since that box began. And so, as far as I'm concerned, that is the flip point between bullishness and bearishness. And so that level, which is around 136.04, is the point that price needs to start trading above, and ideally closing above, before I can say that the trend is actually up and confirming the divergent signal that I've received on Friday. It was worth noting there that the stochastic was also showing a pretty high value as well. I've now moved to the half-day chart, and I've had a quadruple signal earlier on in the day on Friday, and then we've extended higher. In the past there's been this signal previously, and it hasn't really worked very well. It's created what you would say is probably merely a stopping of the downtrend, not the beginning of an uptrend. Over here we have a purple line on a study called the Case Peak Oscillator, which is my measurement for overbought and oversold. And the theory behind this is that this is the low, or there is one more low in this trend cycle. We didn't actually make a new low before we've rallied strongly though. The other thing that is very interesting to me is looking at what other professional sorts of traders look at, and what we have is the Tom DeMark sequential study. And there's really 2 things that matter there. There's blue 9s, which are looking for reactions to the trends. You need a lot more to hang on to though for that to signal a trade. But once that has happened, we have a red 13, which occurred at the lows in the half day on Thursday, and this looks for a change in trend. What has also happened is I look at cycle length, and within any cycle what I'm interested in is the fact that I regard a cycle as 65 bars, and as I move across, that white box is just counting the number of bars since I started, and it pretty much fulfilled, and I'm just 1 bar out, just over 2 bars out, 130. So what we've had there is a double trend cycle. I was previously oversold, I've come down, I've fulfilled a trend cycle, and I know that DeMark operators will be looking at that 13 and looking for a change in trend as well. I've now moved down to the 480-minute chart, and this shows a concept of multiple time frames. We saw that when we made this low here, then we were oversold, and we had what was a single peak out to indicate that on the half-day chart. This time on the 480-minute chart we had what's called a double peak out, and then we had an RSI divergence, which is marked by this black arrow. Pretty simple pattern, and the most aggressive one that I use. It's simply to say that price is making a 9-bar low and the RSI is making a 3-bar high. More importantly, I've had another quadruple signal at the same time as I had the half-day signal on the 480-minute chart as well. Finally, on the euro-dollar, I'm just going to show you how I derive my supports and resistances, which come from market profile. And what I've done here is I've placed the trend together from the 31st of January, and each letter is representing the range of 240 minutes. It's highlighting this point of control, the most time within the trend, which is around that 3608 point. This is where we closed, and we have some good support, which I call a distribution low at around 3440. This is an important concept because supports and resistances, as far as I'm concerned, are never ever the absolute high and low, and I regard anybody who says that those are as quite lazy analysis. The fact is, wherever was the absolute high or low, it's very unlikely that any real trading occurred. In terms of where we get bullish, then truly bullish, then the distribution high or the trend high is around this 3788 point, and if we were to start trading above there, this would open up us into the previous trend, and really we could actually see a move into the low 140s pretty quickly. So that's the euro dollar. I think good support at 34.40. I'd like to see it above 36.08 to confirm the divergences, and then if we went above the high 137s, then we could say that the market was truly trending higher. Just looking at the half day on the dollar index, and this was a market that was also overbought, and I received a quadruple RSI signal on the half day chart on Friday morning as well. Just to finish off, I'm going to just show you something that's happened on the pound previously. This is on a daily chart, and I received quite a rare black square here. This is something that's going through the case peak oscillator again, and what we have here is what I regard as a triple divergence. So we have three lower peaks, and because I'm not looking at patterns of divergence associated with absolute lows or highs, then in spite of the fact that I haven't made new lows within the trend, it is still giving me a divergence pattern within a sideways trend. The point of control is actually around 150.46, so we're considerably above that level already, and we don't really have much in the way of resistance. We could get up into the low 155s before we encounter anything. This was also going back this time to TD combo, which is a slightly different pattern to the sequential, but we had a red 13 here, which also at that time told me that those players would be looking for a reversal in trend, and we're getting increasingly bullish. On the profile, if I put all of this together, we can see that the point of control in this trend, in the very short-term trend, is actually up at around 152.04, and here you can see how there isn't really much resistance until we start building time in this area here. So I could expect the market to get to 155 pretty quickly. I don't want it trading below 52.25. If we start going below 150.15, it would actually be negative again. And this has some implications into the euro pound. This is a half-day chart. Finally, this has potential implications for the euro pound rate. The difficulty you're going to have as a trader is to understand whether the euro or the pound is going to move faster. For people who follow it, there was a sell signal on the daily a few weeks ago, and now I've just moved down and called up a 720-minute chart. And what we've had there is a short-term signal, again on the half-day chart right at the end. And so what this tells me is, if for those people who are short euro pound, really have to either tighten your stop for that short position, consider a withdrawal altogether, and for very aggressive traders, they can look at thinking that the euro is going to outpace the pound and look to get long of this market. So in short, pretty bearish of the dollar. I've been bullish for a long time, but the picture has gradually changed. It seems to me that the dollar has some chance of some weakness. That also has implications for commodity markets. Gold is quite interesting, had a good week last week. As long as that stays above 11.44 and 31, then we could be getting a whole new leg higher in gold and commodities in general. Okay, that's it.